Hello, my name is Kyle May, and on behalf of the Tulane University Burkenroad Reports analyst team covering SHARPS Compliance Corporation, including Pike Howard, Dilip Kumar, Cullen Momus, and Thomas Poe, I would like to welcome you to the SHARPS Compliance video report. SHARPS Compliance trades on the NASDAQ exchange under the stock ticker SMED. Our team developed a 12-month price target of $4.40 per share, which is an 18% increase from its price of $3.72 per share on March 30, 2012. This increase is consistent with the Burkenroad Report's market perform rating. What does SHARPS Compliance do? SHARPS Compliance operates within a niche market by creating cost-effective mail-back medical waste solutions for consumers outside the hospital setting. The company's products are used for the collection and disposal of hazardous healthcare materials such as syringes, needles, and dispensed unused medication. Shown below are the SHARPS Recovery System and SHARPS Secure Needle Disposal System. SHARPS Compliance is headquartered in Houston, Texas, and the company's disposal facility is located in Carthage, Texas. The company was founded by Dr. Burton Kunick and incorporated in November 1992. Currently, the company has a $56 million market cap and a strong balance sheet. SHARPS Compliance has over $18 million in cash and has zero debt. The company has gained a first-mover advantage within the mail-back medical waste disposal market. Consumers can ship the disposal containers to the SHARPS Compliance Treatment Facility through the United States Postal System, or UPS. SHARPS Compliance has recently shifted its focus from large government contracts to other customer and product markets, including professional markets, retail pharmacies, pharmaceutical manufacturers, and home self-injectors to develop consistent revenue streams. This strategic focus and its results can be clearly observed in the 2011 customer billings. Comparing the billing percentages from fiscal year 2010 to fiscal year 2011, home health care has grown from 17% to 35%, and the retail market has grown from 11% to 24%.
Thank you, Kyle. The medical waste disposal industry, including the disposal of medication and medical sharps, is estimated to be $3.8 billion annually. One of the biggest drivers in the medical waste disposal industry is the governmental regulatory environment. As of 2011, 18 states have passed laws or are pending that regulate the disposal of home sharps, covering 43% of the U.S. population, and 22 states have laws passed or pending that regulate the disposal of unused medication, covering 65% of the U.S. population. The threat of entry in the medical waste disposal industry is moderate due to the need of extensive capital investments. Depending on the level of a company's vertical integration, investments may include facilities, equipment, incinerators, autoclaves, and technologies for both operations and compliance with federal, state, and local regulations. The increasing average age and growth of the U.S. population will play major roles in driving growth for the medical waste disposal industry in the future. Between 2010 and 2020, the U.S. population is projected to grow more than 10%, along with a 36% increase in population over 65. The increasing age of the population should lead to increased demand on healthcare providers, as well as increased competition for services provided in the healthcare industry. Additionally, budgetary concerns and uncertainty regarding the funding of Medicaid and Medicare may result in healthcare providers cutting costs in order to compete. In addition to smaller private companies that compete with SHARPS on the local level, SHARPS' main competitors are Stericycle and Waste Management, whose market caps are $7.1 and $15.9 billion respectively. In contrast to SHARPS mailback services, both Stericycle and Waste Management offer pickup disposal services, and both target segments that produce larger amounts of waste than the segments targeted by SHARPS.
Thank you, Colin. As of March 30, 2012, SHARPS Compliance stock has depreciated 21.19% over the past year, with a 52-week trading range of $2.66 a share to $5.50 a share, and a current stock price of $3.72 a share. The average daily trading volume is approximately 42,978 shares, making it a relatively thinly traded stock. SHARPS Compliance as of the second quarter of fiscal year 2012 had issued 15.1 million shares, with 15.07 million shares outstanding. The float is approximately 11.53 million shares, and the company has not repurchased any stock as of March 30, 2012. The short interest as of March 30, 2012 is approximately 480,000 shares, or a little over 4% of the float, with an estimated days to cover of 10.4. SHARPS Compliance Management, as of December 2011, owns 16.6% of the total shares outstanding, with the Board of Directors holding 15.88% and the Executive Management Team holding just under 1%. Insider transactions according to SEC filings for fiscal year 2011 indicate management's willingness to purchase additional stock in the open market, as well as to exercise stock options available. Over fiscal year 2011 and into fiscal year 2012, management purchased a total of 251,848 shares. This activity is a good indicator that the goals of management will continue to be well aligned with those of shareholders. And simply put, we like that management has skin in the game. The top institutional holders comprise 16.41% of the shares outstanding, and recent SEC filings indicate that institutional holders overall are acquiring new holdings in the company or adding to their current positions, with a net purchase through fiscal year 2011 of 240,630 shares. This positive net purchase of shares by institutional holders is a good sign that SHARPS compliant stock is gaining exposure from institutional investors, albeit slowly. Furthermore, in speaking with institutional holders of SHARPS compliance, they cited a few key reasons for owning the stock. The first being that investors agree with the management team's recent focus to shift the sales force towards new segments. Secondly, investors also express their confidence in the company's high operating leverage and the relative ease with which the company can scale operations. Lastly, owning SHARPS compliant stock gives you a free option on any future government contracts that could be awarded, thereby significantly increasing the company's revenue stream.
Thank you, Pike. We arrived at the 12-month target price for SHARPS compliance by using a combination of discounted cash flows and price-to-book value ratio. We used the historical price-to-book value ratio of SHARPS compliance to value the company, excluding the same for fiscal year 2010 because of the distortion created by the government contract. This decision to use SHARPS' historical ratio was made because of the difficulty in finding the comparables within the industry. We projected revenues for SHARPS compliance without considering any government contracts in an effort to smooth the revenue streams and to best capture the growth occurring within the segments of the company wishes to grow in future. We constructed a discounted cash flow model by projecting future revenues using a regression model from variables deemed as fundamental drivers to SHARPS compliance's sales. We assume that SHARPS compliance will not change its capital structure and will continue to operate with zero debt. Since the company has no debt, the WACC we use to discount the cash flows is same as the cost of equity. We used a terminal growth rate of 3.5% based on the macroeconomic factors and SHARPS compliance's projected future performance. Based on the discounted cash flow, we got a target price of $3.74, whereas based on the price-to-book value ratio, we got a target price of $5.85. We gave 70% weight to the discounted cash flow and 30% weight to the price-to-book value ratio to come up with our final 12-month target price of $4.40.
Thank you, Dilip. Along with our financial forecast of SHARPS compliance, we examined the business fundamentals of the company to provide analysis for the future outlook. With the non-renewal of a large government contract in fiscal year 2010 that marked the end of a maintenance phase of the contract due to government budget cuts, the company has redirected its focus more towards the professional markets, retail pharmacies, and pharmaceutical manufacturers. SHARPS compliance was the first mover in the mailback segment, and although Waste Management and Stericycle have begun to offer mailback services, SHARPS continues to dominate the segment. The company currently has zero debt, and as of quarter 2 fiscal year 2012, maintains over $18 million in cash. Although this isn't the ideal capital structure, it ensures that SHARPS can continue to grow in an uncertain future. Because of their capital structure, SHARPS compliance is an ideal company for a buyout. Because they have no debt and surplus cash, the enterprise value of roughly $40 million, almost $20 million lower than its market capitalization. Government regulation of the disposal of SHARPS and unused medication has been tightening in recent years. With regulations continuing to increase on all levels of government, federal, state, and local, SHARPS compliance is positioned to benefit from an increased amount of medical waste that must be disposed of properly. The Burkenroad reports are produced solely as a part of an educational program at Tulane University A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you for viewing our presentation for continuing coverage of SHARPS Compliance Incorporated as part of the Burkenroad reports for Tulane University. If you would like to view a full version of our report, you can find it in its entirety at www.burkenroad.org. Thank you very much.